Well, time to have a look at markets now. Over in Asia, we saw those particular markets rise, and U.S. futures are steady at this point. And this is as China's technology clampdown eased. And of course, investors are looking at corporate earnings, which are helping to counter the concerns around the Delta variant. We had Alibaba reporting as well, their revenue missing estimates for the first time in 2 years. And analysts saying that this is a sign of the toll the clampdown is having. Over in Europe, that market is driven by the sentiment around corporate earnings. We are expecting the likes of Hugo Boss and Siemens Energy to report later on today. And when we look at U.S. futures, as I mentioned, steady at this point. Bringing it down to South Africa, we had Liberty publish their financial numbers, and they mentioned that because they had to add R1 billion to their COVID reserves, they have suffered a loss, opting not to declare a dividend at this particular point, citing the uncertainty of the pandemic and the direction in which it is taking. To talk to us about what is happening in global markets, and in this particular interview, we're going to focus on Asia and explain to you why everybody is concerned around China's clampdown. And to have that conversation, we are joined by Chantal Marx, who is the head of research at FNB Wealth and Investment. Chantal, thank you so much for your time. Let's start off with Tencent. I mean, a lot of people might own Naspers shares, which has exposure to Tencent, but let's explain why this is so important, or perhaps even go back and say, how big is Tencent, if you had to briefly explain to us?
So it's actually very difficult to even think about, but Tencent has a market capitalization or an overall value of about 8 trillion rand. That is bigger than the entire JSE. It's also 82 times the size of Shoprite, which I think is a company that most South Africans are familiar with. And to give you an idea of the scale of its operations, China has over 1 billion internet users. And of those 1 billion internet users, they occupy about 40% of their time online on one of Tencent's apps. So these numbers are absolutely staggering. It is a huge company. It is a huge company in the Chinese context. And for us, it's very important because it really drives the value of Naspers and Prosus that collectively makes up about 15% of the JSE.
What's your assessment of the investor mood in China and the regulations, and what does that mean for South Africans in managing that risk?
So it's quite mixed at the moment. Some investors are saying that the market overreacted, that China won't necessarily blow up its entire tech sector, which the market seemed to suggest at one point. But others are more scared. And the reason they are scared is because an entire industry, the online education or private tutor industry in China, was effectively blown up by Chinese regulators overnight. They had some decent reasons that they put forward for why that specific sector was a big problem from a societal perspective, but still the fact that the Chinese authorities had the power to do so has left investors scared. I think that in order to invest successfully, you need to remain quite calm. You need to keep a cool head during times like this, and you need to take opportunities as they come due. But you also need to be aware that it is risky to invest a lot into one single company, and that's why it's so important to diversify. So you can just reduce the risk of something that big happening in a share that trades in a specific jurisdiction that has a regulatory regime like this. As an example, yesterday, Naspers and Prosus share prices were down quite significantly, but the JSE All Share Index only closed slightly down, and that slightly down was driven by very positive movements in South African Inc. shares, as they are commonly known as, so mostly the financial sector as well as retailers locally, which just highlights how important it is to have more than one holding and to have several holdings in your portfolio.
What do your growth projections for China look like, especially now as they battle with this COVID-19 outbreaks?
So we still expect quite strong growth from China this year, and I see that market consensus is also for 8% odd growth into 2021. And that's mainly because of a very low base set last year. And then it's a question of how that economy gathers momentum again, because we are still grappling with COVID-19, not only in South Africa, but globally. And now we've seen an increase of active cases in China coming through, the Delta variant becoming an issue. And it's so difficult to quantify because you don't know what level of restrictions may be placed onto that economy and how it will ultimately filter through to overall GDP growth. For now, I think that it might be significantly less severe than what we saw last year or even previously, just because the coronavirus is understood a little bit better. The treatment regimen is now very clear. And you also have a vaccine rollout. In China, the data isn't really forthcoming, but from what I can take, as of mid-June, they had about 15 to 20% of their population fully vaccinated. So that also plays a role.
Right. So the dollar came into August on a shaky note. What's your assessment of the dollar pre the Fed's dovish stance versus now?
So the dollar will typically strengthen when the expectation is that interest rates or monetary policy in general will tighten. So when interest rates will increase, the dollar will typically strengthen. That is just because interest rates will look more attractive in the US relative to other jurisdictions. And the opposite is true as well. So a dovish stance means that the Fed is not looking to immediately increase interest rates, and they're also going to keep monetary policy quite loose. For that reason, you will typically see the dollar weaken. What was very interesting is that I looked at the rand's movements over the last 2 days, and even though the dollar has weakened, it doesn't fully explain the strengthening of the South African rand because it's outperformed its emerging market peers. So I think there might be some local factors playing a role for the rand at least.
All right, Chantal, thank you so much for your time. Other events that we're keeping an eye on today, we are expecting Eurozone retail sales as well as, the crude oil inventory report that typically comes out around about this time. And of course, tomorrow, the Bank of England's rate decision. That is it from me. We're going to take a quick break. And when we come back, we'll have more news for you.